Well, you're using the term volatility. Nobody used the term volatility on the way up. They only used the term on the way down. Um, so I guess there's good volatility and bad volatility. I would say things probably now are less volatile than they were on the way up because we were regularly seeing $3, $4, $5 days in silver. Uh, Now it's been a slow bleed of, $2, $3, 75 cents, whatever. But it's to the downside, so it's volatility that people don't like. Where we are now, we are in the bottoming process. This has lasted a little longer than what I had expected. But I want to tell people this is and we've had many, many of them since the year 2000, 2001, when gold and silver bottomed. We've had many, many gut checks, but this is just another gut check. And you've got to ask yourself, why did I buy gold? Why did I buy silver in the first place? Do you know why you own gold or silver? Do you own gold or silver because it was going up or because you thought it was going to go up? First off, gold and silver don't do anything. They don't go up. They don't go down. They are a piece of metal that we've been fooled into pricing in fiat terms, in dollars, in yen, in euros, what have you. The way it should be, the price should be quoted is right now, the dollar is 1/4,000th of an ounce of gold. 25 years ago, gold was 1/300th. If you look at gold as being priced in dollars, it's not as shocking.
In this video, we are going to break down why Bill Holter believes the global financial system is facing an inevitable credit crisis and why investors should look beyond short-term gold and silver volatility. Let's dive into the video.
That the price is going from 300 to 4,000 or 5,600, whatever the high was. But it is more shocking if you're looking at the dollar that's being priced by gold going from 1/300th to 1/4,000th. That's a complete and utter crash of what's the number, 93%, whatever, loss of purchasing power versus real money in 25 years. But yet, that's not the way it's viewed. It's viewed as, oh, gold's going up or silver's going up. And that's not the case. Getting back to the gut check, you need to go back to the first time you bought an ounce of gold or bought an ounce of silver. Why did you do that? Were you worried about the finances of the U.S. government? Were you worried about the finances of the government, whatever country you live in? Were you worried about fiat melting down? Well, that's what has happened and has been happening.
Don't let short-term market drops scare you into making bad choices. Gold and silver don't actually go up or down. They are steady while paper currencies are losing value. Over the past 25 years, the US dollar has quietly lost over 90% of its real purchasing power against real money.
Happening for the last 25 years. So we get this pullback. People are pissing in their pants because 6 months ago, we were not even 6 months ago, 4 months ago, 5 months ago, we had much higher pricing or much lower pricing in the current currencies. Gold and silver were due a correction. They were absolutely due a correction. Were they due the correction we've seen? I think it's way overdone, especially in silver. But if you understand why you own the metal and what the purpose of having capital outside of the system, you should be able to relax a little bit. And if you have funds that are still in the banking system or still in the system, now is a perfect opportunity to get those funds out of the system, into metal, into your hands with no counterparty risk and no default risk. And that's the key, no default risk. We live in a world that is basically insolvent. I don't think there's a large central bank anywhere that is healthy. And I can say that because we know the U.S. Treasury / Federal Reserve are not in healthy positions. The Treasury now is paying $1.5 trillion in interest alone. That is the biggest category of spending other than, I think, Medicare. Or I'm sorry, not Medicare, but Social Security. It's bigger than defense. It's bigger than anything else. And it will only grow, especially if interest rates go higher from here. It's going to grow much, much faster. If you look at the Federal Reserve, they have a negative equity position at this point. I looked at it, I think it was 4 years ago, they had $65 billion in equity, and interest rates have gone up since then, and their bond portfolio has cratered. The number is what, $300 billion or whatever. So they've got a negative balance sheet. As far as other nations are concerned, what do they use? What do the nation's central banks use as their primary?
We are currently living in an economy built on a completely broken foundation. The government is now paying trillions just in debt interest, which is growing faster than defense spending. Central banks around the world are holding reserves issued by an insolvent system which cannot last.
Reserve. They use dollars that are issued by an insolvent entity. So you're looking at a financial system literally with no foundation at all. And when this is all said and done, people are going to find out that the only monetary foundation you can have is something real. Now, it doesn't have to be gold, doesn't have to be silver. It could be a commodities basket like the BRICS are proposing. But in that basket, they're proposing that 20 to 40% of that basket be gold. And then, of course, silver, and they're going to have oil, et cetera, et cetera. But the bottom line is we've been living in, a fantasy world for however long because the currencies are nothing. The currencies are, they have no backing other than from the issuer, and these issuers are insolvent.
I wanted to tag on to something that you just mentioned about the preponderance of dollars as a reserve asset holding of foreign central banks. We're going to put a link in the description of this video to an article that just came out in June saying gold overtakes treasuries as the #1 holding of foreign central banks.
For two reasons. One, because the central banks are buying gold. They're buying it voraciously. And the other reason the price of gold has gone up or the value of currencies have gone down. That's why gold now is a larger percentage of dollars. But there's a lot of governments out there that don't own gold, that still have 100% of the reserves in dollars. An example: I lived in Costa Rica for 5 years, from the end of 2006 to 2011, and by 2010 or 11, I'm thinking to myself, okay, so this country's 100% dollar reserves. When the dollar melts down, what's going to happen to the Central Bank of Costa Rica? It'll be total chaos. So again, going back to the financial system needs a real foundation, and there's no foundation. And the derivatives have built up, dramatically since the 2008 great financial crisis.
The global financial reality is shifting fast and paper currencies continue to melt down. Global central banks are voraciously buying up physical gold, allowing it to overtake government debt, Reserve says. When this illusion ends, everyone will realize that real money must have a physical foundation.
The other thing you mentioned earlier was people asking you, and I get the same question from subscribers, from viewers on an ongoing basis every month. When will the dollar collapse? When will the dollar collapse? And I go back to a interview you did with the late, great Jim Sinclair, your former partner, and the title of your interview was "When is Now?" And when they say, when will the dollar collapse? You just gave us the comparison of getting our heads on straight about whether we should be talking about the price of gold or the price of the dollar. So the price of the dollar, you mentioned, from a few decades ago to now, but when the foundation of when FDR issued his executive order calling in gold coinage in 1933, as you know, the dollar was defined as it was 120.67, approximately 1/20th of an ounce of gold. And now at 1/4000th ounce of gold, the dollar has collapsed by 99.5% in gold terms since that moment. So when people are asking, when will the dollar collapse? And you keep saying, if you can't see it, I can't help you. But this is human nature. We have to be patient with people because this is the bewitching sleep spell that had been put over us, and when things are happening on a gradual enough basis, people keep looking in the wrong. They're being told to look for the wrong unit of measure, rather than realizing that gold has been, is, and will always be the unit of measure. Any further expounding that you want to do on that?
No, I think that pretty much sums it up right there. I mean, gold is the measuring stick. If you look at the Dow Jones or the S&P 500 in terms of gold, it's not even close to an all-time high.
Yeah, that's the other thing, is that people get told by their mainstream financial advisors and their retail financial planners and all that sort of thing, you always stay with the market because the market always goes up, goes up, goes up. What they're saying is that the dollar is always being destroyed. Yeah.
Well, it's a slow motion devaluation, if you will. If you look at currencies that have blown up because of hyperinflation, you initially see a stock market that gets hit 30 to 50%, and then all of a sudden it turns and just does nothing but go up. But it goes up slower than the currency goes down. So you've lost and are losing purchasing power.
People keep asking exactly when the fiat currency system will experience a complete collapse. The truth is, it has already lost over 99% of its value in gold terms since the early decades. Advisors tell you to stay in the market, but they are just hiding a slow motion devaluation.
But you're getting more, dollars, yen, euros, pounds, what have you. And I do want to mention the gorilla in the room that nobody's talked about it for, as far as I know. I mean, I've not seen really anybody talk about derivatives. Derivatives are the gorilla in the room. I mean, Warren Buffett calls them weapons of mass financial destruction. Understand that there's 4, 5, 6 times the amount of derivatives outstanding compared to physical assets, financial assets on the planet Earth. I mean, derivatives bet on weather, they bet on water temperature, they bet on whatever type of bet you want to make, you can make it. There will be a counterparty to it. The problem with that is when the music stops, it's all worth nothing. The winner wins but loses because he doesn't get paid. The loser loses because they lost, and if they lost so big and can't make the payment, nobody gets paid. And this feeds back to credit. It feeds back to the fact that the entire system runs on credit. The entire financial system runs on credit, and the entire real economy runs on credit. I used the analogy of a loaf of bread. I've used it 100 times. You cannot get a loaf of bread to the store shelf of your local grocery store without at least a dozen uses of credit, probably much more than that. But if any one of those dozen uses of credit fails, there's no loaf of bread. Of interest is, I understand over the last 24 hours, credit cards have not been working in Japan. Ask yourself, what would your world look like if that went on for 3, 4, 5 days, a week, 2 weeks? If credit cards didn't work, what's the world going to look like? And that's just credit cards. What if bank credit goes away?
The massive financial derivatives market is multiple times larger than all the physical assets on Earth. The entire global economy relies heavily on the endless chain of credit just to deliver daily goods. If even one leak in this complex credit system breaks, the global supply chain halts instantly.